Good afternoon, all. It's 5:06 p.m. on July 31st, 2022. My dad's birthday. He would have been 94 today. So, anyhow, I'm sorry I had gone to LA. Actually, we did one webinar from LA with very little resources, and all and monitors and so forth. But I'd gone there for about 10 days of short vacation. A few days in Southern California, a few days in Northern California to see some cousins and some friends, a couple of investors. I haven't seen them in at least 3 to 10 years, that range. Usually I've been in and out, but this time they got me. Actually, COVID did. BA5 got me in Atlanta, courtesy of Delta Airlines, over some stupid comments on that one of them made. And I should have probably fought it, but they flag you. You're better off not to make a fuss in the cabin. So I left with 1 minute to go, and then we ended up 4 hours on the ground. And that 4 hours cost me a COVID. Anyhow, but I'm back. I'm back in Florida. We came back, and then I had a few clear days before I took off. I did that just out of courtesy to others. But once I got here, it felt like it was coming back, and as you know, with Paxlovid, you have a chance of things coming back if you're in a high risk group in terms of age or immune deficiency exposure, which I have both. So this week I took it a little bit easy, and we took 2 tests, PCR tests. I'm not using antigen for these; they're just they're not good at false negatives. They're too high in false negatives. That's why. But first one was indeterminate. They kind of avoided it. The second one was good on the 29th, and it got reported to me late last night, as it's negative. So hopefully it's going to stay clear and we move forward. During the time we were gone, a lot has happened. So let's go through that. As you recall, in early April and May, I mentioned that my time cycle studies are pointing to 4th of July low. Well, that wasn't exactly correct. We were off of that. But we were off about this is the low, here's 4th of July. So it was almost 10, what do you call it, 10 working trading days. We're still holding holding long. It's at 4,130 now. I think I just posted a chart recently. We're coming back pretty decent, and now, let's see. There we go. This is the latest as of today. You could see that we held up quite a bit here. We missed this run up. We were wrong here. We were in line together with the market. We held up here. This market but the market from the peak is really, really a lot lower. So that's where we're. Oh, I'm sorry. This number is wrong. This has to be adjusted. I don't know what that is. I'll find out. But this is a lot less than 93. So over the period here. Remember, this goes back to 14. This is my accident. Remember. Anyhow, I'll fix that. I'll repost it. Try and get back and getting back to you guys and getting the stuff done in an orderly manner. Charts for OTF, for example, today I sat in and get them all done. But let's go through our sequence we always do, which is after we start the session, we go through our economic calendar. We're starting the first week of the month. So Friday is going to be crucial. Obviously, we're going to have wait a second. No, that's not it. Oh, they haven't updated this. This shows 29. Yeah. I'm looking for a red report should be employment. It's not updating. Why are they not doing this? I guess. Bottom line is, guys, we're going to have a first week of the month. Friday is going to be crucial. It's going to be non-farm payroll. I think we have a little bit of data on mortgages. I forget. And but this is last week. This is last week was behind us. GDP came negative, as you know. And the whole debate now, over the weekend, the whole debate on the talking heads on national TV was is it a recession or not? Let them worry about it. Um, the say it doesn't give me anything. All right, go. Um, well, my issue has been that I'm not an economist, but you have a job market this tight and shortage of workers. Um, that's not a recession. It's not a recession. That's a that's a conflict. Um, diametrically opposed signals. I'm sorry I can't bring this up. Maybe on Wednesday we'll do a bit full rather than the econ calendar. Let's go to our charts. Okay. We're at 2 sigma. We're pulling up here. I think where we are, we can get through this congestion here. About 4166 area, 4200 area, at least at this level there, which would be what? About 4200. Then we could head up, but that's going to be a risk here. We're going to find out. But this was a good recovery. We have a cross coming up here on the 50 and 20 day. A retest here in the chat room I talked about on Tuesday. It looks like it right before the Fed meeting. I said this is a good area to be bought. I don't think Fed has the stomach to mess things up. Well, they did give us 75 basis points, but the key thing was the departure from the typical commentary, which was we're not going to get guide forward, but we're going to give you data. So before it was both. We're going to look at data. We're data dependent, but here's our guidance. They took that down. It's a little bit easier to manage that, believe it or not. It takes the variability of the input from the Fed out. So we'll see how true they hold to those words. But that's why you had a huge day, and now you got 3 days back to back. I'm most likely we're going to have a little pullback first. We're past 2 sigma. We have our 3-day run off of a retest of a 50. I think we could probably take a little pause. So tomorrow could be a tough day to trade. I'm going to stick with the system. I'm coming back. I'm a little rusty. On Friday, I traded. I just traded for Tico's account. Tico's got a small account. And he's been pushing me, daddy. I need some Vic. Yeah, he wants some Vic. Yeah. So I said, fine. So I just traded MNQ. When you've been away 3 weeks, things are not normal. You just got to come back slowly. Plus, if I got the COVID thing. Now look what we got. 286 on the McClellan oscillator. 67 on the breadth. We're at extremes here. None of the stuff here says we could short, but probably taking a pause would be good. I'll decide tonight after Goldberg's Open should I actually go flat or not and sit back. But I suspect it's going to pull back. I just don't have the inclination right now to go short. But it won't hurt to go flat, wait a few days, and then see how we are. Or maybe wait a week and then we engage again. Mainly because of the non-farm next week, next Friday. Let me also look at this quickly. This is a no. Hold on. This is what we have. That was a buy. This was a buy. This is a buy. Yep. Yeah, this system has been very good. Yeah, this is Lowry. But I actually want to go see this one. Yeah. See, they're not exceeding any high. Yeah. Maybe a pause. Not more than a pause. So that would be my inclination right now. Again, yeah, and this one I have to also get my head straight. But solid gains on CIs and CI diffs. A little shaky, but overall the bias was up and held up. A little more noisy on the volume side for the NDX, but yeah. Other than this huge spike middle of the we're coming to this low. Remember that 3 days coming to the middle of June. The June low was on the 16th, and you could see the divergence. Huge move down at the beginning on a down to up volume. The 2 or 3 days later, this is when. Hold on. Yeah, when the low was put in versus. Yeah, it's 2 days later. When the low was put in, it was quite a bit lower. But rather than hitting like 50, 60 on the up, that's a huge volume ratio of 57 to 1. You went down to 15 to 1. This sounds big. I realize that. Well, this was 57. That reversal, that with a lower price reading but a much better volume provides a setup of a bullish divergence and be pulled up. So it was in the charts again. Okay, let's look at canaries in the canaries in the mine. Okay, that's Russell and transportation. Okay, actually also 3 solid days in transportation. Solid pretty much. I mean, after this low on the 14th of July, we're pretty much rallied up here. We're not going to go up without Russell in NASDAQ, and we're certainly not going to go up in SPX without transportation. By the way, there's a gas component in the transportation. This is transportation of not gas, energy component in transportation. That when the energy costs go up, actually transportation behaves slightly better. That was a huge argument back in 2005, I remember. In a conference we were in, and guess who came to the rescue? Bollinger. John rode in with his white horse, a couple of Garth analysis, and everybody shut up. And he was right. He was right. So, anyhow, this is our trainer. Whatever I'm doing, I'm sure I'm not perfect. I apologize. I'm not fully well yet, but I just want to make sure I get back on the horse as soon as I can. And practice makes perfect. I'll be better next week. But I got to start somewhere. Yeah. Okay. Here's our detrenders, which is again difference between price, 50 bar and a 200 bar. These are 50s. This is 200. Sorry, the lines don't match, but we leave that floating so that we have maximum chart area. Okay. Negative. This. Okay, we got 4 and 4. Obviously, we crossed through the 50s on 4 of them. We have not yet. So on the 200 days. So obviously we're behind the death cross. We're underneath the death cross here. This is the death cross, right? These. As we come to we're like a rebirth cross. When we 50, because at 200 there we can rev it up. We also had the effect of the earnings. Earnings did not turn out to be as bad as people ever expected. The best earning season for me is October. So hopefully if we don't mess up much here, we have a month to go. Volume is going to be low. Fed is quiet. They're going to have Jacksonville, but they're not going to be Jackson Hole, but they're not going to have any commentary, hopefully. So we can get it to early September, then go to Jewish high holidays. And then after that, this progression to the upside will continue. Just too many unknowns, especially COVID, gas prices, inflation, and of course earnings. Now, when I say gas prices, implied that is what's happening with Ukraine. All right, let's go to what I call S&P. Model, the short-term and long-term model. We're still on the short on the model. The weekly is. I'm not running the time of digest just solely by these. These are merely sophisticated indicators giving us another cut or another input into the model, into my mental model in my head. At the end of the day, I'm the one who's pulling the trigger. Why? Because you're not going to get one indicator that's going to be right constantly. As a matter of fact, probably you're lucky to get to 50, 60%, or 70, let's say 60 to 70%. You're lucky to get an indicator to be that well. You're kind of what I call preponderance of evidence, like a civil case, not a criminal case. There's nothing here beyond a reasonable doubt. It's not going to happen. Market will give you enough doubt. This is all decision under uncertainty. Having said that, I suspect this is going to change first, soon. While we're still long. While we're still long, we have a chance to get this crossed. But we got to get through the 200-day. But by the time we get to 200-day or close to it, you're going to get a buy signal here. But so far, we're at the sell on the weekly. Daily has been oscillating, obviously. As we get to crucial area, just like a tug of war, is going to go back and forth, even oscillate more. We had major readings on weekly highs and lows. I'm sorry, 52 weeks high and lows. Pretty high readings there, 180 there. This basically said we're near the bottom, and as you could see, the 52 weekly highs died, just went to nothing, and then they're going to reverse, just like here. When we were here, said we have a lows coming. Some sort of low is ahead of us. Now it's saying we're done with the lows. We should be pulling up. So, kind of a scoring system, if you will. Okay, I think the stats are posted. We look at. By the way, I'm going to do a full. If I get a chance tonight or maybe tomorrow, I'm going to do a full-blown charts on the PMT login, on the page, because I want to use all our charts there. We haven't done it in a while, but we've been behind in a lot of other work. I took a lot of criticism, but that's okay. The fact is, that stuff don't move me. I do what I need to do. I don't get shaken by little wins here and there. We were working on crucial items. They're now stabilized and they're doing good. We went back and fixed and we upgraded the HA options. I don't know if you've been with the option package. Nancy has done a terrific job. Now it's time for PMT. And this week we're going to get the charts up on PMT. And we're going to say some sort of sequence there. But to what I said, maybe not your schedule, but I'm Patton at Kasserine. I do things on my schedule, except this torpedo called the COVID. But I'm coming back. I'm doing it the way we think we should be done and properly. But so the goal here is that to get either PMT up tonight or maybe tomorrow night. Okay, with all these charts. Momo is at 9, almost 10. Again, that's a warning. We usually are going to pull back. Most likely tonight I'll go to look at what the Globex does. I have a small window. I think it's 9 o'clock. I forget. I'll write to Time Digest. They're still not operational, but they are taking our emails. They are responding back. So I register with them where we are. It's always better if somebody else looking over your shoulders and ranking you rather than you yourself saying you're any good. You're never good when you say you're good yourself, right? Look at Trump. You've got to have third party uninterested come in and rank you. So we're going to throw that in there. Probably. We'll see. But this is another proof. We're at 10 area on Momo. That is a time to take a pause. Yeah. Most likely we're going to pull back in. Now, I don't think I'm going to be flat for very long. I will caution you. Probably very shortly we'll go back to be long again. Sorry, I have to get kept hydrated. Let's go to SQ. Oh, let me open questions here, so in case you guys have any questions. Oh, hi Dennis. Oh, there we go. No, Dennis. No, as I mentioned earlier, I've had a bout of 1 or 2 with COVID recently, so yeah. Nobody had any mask on. Really bad. Thanks to Delta Airlines over some stupid thing on Tico's stroller. Don't worry, I just bought a new one for much bigger. Yeah, just out of frustration with these idiots. Yeah. Look at Delta Airlines. I came on the Airbus 320. How good was 320? How come it could fit on one aircraft, not to the other one? But you make an argument like that and be a hard ass, they'll blackball you and you can't fly again. So I just didn't want the captain of that luxury. So I left the aircraft. But I ended up with COVID. Oh well. Oh, okay. Uh, here's our SQ. Thanks for asking, sir. Okay, we rose a 10 on SQ, which says that they're putting up some trades on the downside. But to me, it still is 120. Anything under 125 is very, very noise level. Remember, design area was 100 and 150. 125 is a neutral area. So in this case right now would be 3 sigma right up here. It's a very neutral area so far. That being said, I'm not reading this pretty strongly. Now, because this is a mainly uh, tail, got my words. Tail risk on the downside. Remember, we have two tail risk in any bell curve, but this is the downside. Tail risk of the SPX option, as denoted by the options. It's a little bit early. Once we get in this area, 130 and up, then we can assess to see, or do we see any meaningful bets by the big boys or not? So far, I think it's neutral. I don't see much, and it's meaningless anyway. Up here, up there, up here, these are crucial times. So that's more meaningful. I would leave that, let's say, for late August, mid-September area. Historically, that's when that we've seen seasonality by SQ back, in those formations. Remember, you want a high reading and you want a spiking in the sigma levels. So I'd say about a month from now, look, this is 2 months now, 2.5 months. SQ has meant nothing. Why? Because you're already down here. We're already down here. What you want to do with SQ is make a reading up here. So what the risk is down below. And you can see the peaks. So no, it's responding very well. No risk on the downside right now of anything meaningful. Bottom line. Treasuries. Okay, I think Tico posted this as the chart of the day. This is a historic chart. We have not seen anything like this recently, in recent memory. And you could see how it rose. And look at this. This was massive coming to this past week. Of course, it dropped down heavy. Now read the actual. This is a YT. I'm sorry. This is a discount rate versus the 3 YTMs. Yield to maturities. Just divide by 10. But 2.2, 2.6, 2.6, 2.9. Getting a little bit normalized. It's getting a little bit normalized. So what it means is what? We're about to go to normal interest rates. Now, the still money is cheap. Why? Because this is not risk. This is not inflation adjusted. This is nominal. So by the time you make it in real terms, it still is cheap money out there. Yeah. Still, the yield is negative. So we've got to get this to some positive area before the economy gets cleaned up. Problem is that both parties had a number of years of mismanagement. We've had so much debt, and every time we get into trouble, we have to throw out cheap money, which is inflation adjusted. The cost is zero or sub-zero. That's where we're at now. So, and we take too much risk. We as money managers, as risk managers, we take too much risk with cheap money, and so we gotta get away from that. That's a pretty bad addiction. But this chart is historic in terms of the move, the size of the move by as shown in what we call the term structure of interest rates. So different maturities, all on the same page. Just amazing. And you could see 30-year, which is long-term obligations like insurance, mortgages, car loans. They're all receding back. They pull back, and of course, the front end keeps rising, which is that's what we want. We want this to get a little bit higher. So, but after all, this is all technically the Fed is responsible for, or can manage or manipulate. Not this stuff. When you get into this stuff, then you got the what do you call it, the QE stuff, which is really not part of their mandate. All right, TD. Let's go to this chart. Okay. Wow, 81. 81, yeah. I forgot to look at this on Friday, yeah. Yep. All right. All right. With 81 on SP2, we are overbought, no question. Sorry, let me see what's going to be. No. And good. We'll probably take some action tonight. Rendezvous points, we got together down here. That was the low, right? Mid-June. Before I left, yeah, late June, mid-June. 16, 8, 17, that was a low. Came back up again. We were 10 days off. But remember, we're talking about in this period that we're going to have a low in that cycle. It's in the webinars on the YouTube channel. We're coming for another rendezvous. We probably have it right there. You could see all three line up on the same area. All in all, I think we're at a spot where we should pull back. We'll see. I think the 3-day move was just huge, absolutely huge. Okay. So I may have to check if this is correct or not. What do we have? July. July is done, so this has to be. Yeah, this chart is going to be updated. I'm sorry. This has to be Q, which is August, and then this has to become November, which is X. BXX 22. Okay. By the way, one of our trades is not going to be good. We had bought some call options on VIX. It's not going to be good. We'll see how it does this week. Last week, because it was 3 days, boom. Starting with the Fed comments, it just boom. Eliminated the call option on the VIX we had. But there was a signal there. There was a signal on VIX, but yeah, you just can't get every trade right. You get 3/4 or more right, you're good. You're God. You're better than God. You're Pat. So, but we're not there yet. We'll find out. Okay, 335. This is adjusted. Now taking into account, we're taking the July out. And here we're going to add VXX22. And then VXZ22. That's for December. Okay. That's our term structure of volatility. You can see in the volume also. So, the 3 months spread is -3. Yeah, this is near the tops. Usually is. The 3.5, 375 you see on the negative side. In the normal days, remember, COVID changed all of this. COVID, you had to plug in like 3 handles just to plug in to neutralize it. And that's, we're playing with data, but that's the best we could do to make sense. So I think all being equal, if you have some Bauer stocks, go take some profits out. Otherwise, you're going to see some pullback this week. We're off a little bit of a VIX. We'll see. I think probably that's where we should. That's where the VIX is now. I dropped crude from all of this, guys. Okay, so let me do this. Okay, yeah, there we go. All right, so yeah, we're getting to an area where this should pull back. This was our signal, by the way, so we have to shift it. We may roll it over. We'll see on the option side. So those are the option package. Be prepared to hear from Nancy or I on a VIX trade, VIX spread. That's that. What else we have? Yeah, look at the sigma level. That's -2, -2, -2. Yeah, we're getting close there. On the upside, we can go 4 and 5. Downside, -2 is max you're gonna get. So I think we're near that area where it's gonna reverse back down. Let's see what else we have for you guys. Nothing here. Let me go to my chart again. Sorry about econ data. I'm not getting a refresher here. Still showing us last week. All right, let's go here. Yeah. There we go. All right. So finally, we went down below 50. Got to 20. Remember, there were a couple of meetings we missed. Go to go to the plus 12. Looks like that way. And then we had a hold on. No, okay. As we pulled up, yeah, I was thinking it was a diversion or not. It's not. Yeah, it's not a lower price. No, you don't have a diversion here, but it pulled up, and look how fast. Like I always say, the distance between the two moving averages, how fast that is being mitigated, and that's why we shoot up. You shoot up very strong, now at 36 now. Basically, it says that 36% of the stocks are now above their 200-day. Long way to go, but we made it down there. Usually, we don't go there and stay. Let's see, can we do 5 years here? Okay, you could see we don't go down there and stay. So that's probably our low. We're going to pull back up. Maybe we do another retest, and then we pull up in the fourth quarter. Again, key thing is the earnings did not came as bad as we thought. With that said, I think I'm done. There's not much going on here, unless you guys have some questions for me. Or if you want me to analyze a trade, I'll be more than happy to do that. This is being recorded and will be posted on our homepage, which is on our YouTube, or on our YouTube channel, which is linked on our homepage. I meant that. And you go there through right here. We'll go there. Thanks, Michael. Question. Yes, very good one, very good one. Yes, Michael, as always. To be or not to be, yeah. Because we had a pretty long run, and because we were hit with so many items, I'm suspecting, as a matter of fact, Michael, I've had that question of myself, quietly, not out loud, but to myself. If you recall, recent bottoms were V's. How come this time is different? I think one of them is that this is a multi-pronged problem we had. You had the inflation, you had coming out of COVID, and then you had also Putin, oil, and Ukraine. So we became multi-factor model, and only a few times everything was bad, everything lined up. But there were other times you would get good news, bad news, good news, bad news. So we didn't get a clean V. So I suspect also our rise is going to be shallow, not as fast. When you get to a V, people are very, very nervous, and then as it flips, the face of the shorts get ripped. We don't have any of that. This has been it's been pretty much a two-way market. You could make money on both sides gradually. If you look at the also slope of these curves, they're pretty shallow. The 50 bar, the 200 bar, compared to, let's say, go to March of 2020, different story. Yeah. So that has been actually a question to myself: to V or not to V? Yeah, not in that eloquent way, but are we going to get it? Or if we're not getting a V bar, a V drop, it's the next shallow drop is V. At one point, I thought it was going to be the beginning of a V, and then look, that was the low, and they bought it. And two retest failures, and they bought that. I don't know. Order flow is a wonderful thing, but also quite a bit of unknowns in it. And we have too many variables out there, now more than ever. So there's I don't see a V here. I think it's going to be choppy. We'll see that, but my hope is that we get the inflation down. That's the first thing. And the sad part about the inflation we have now is really hitting the poor the worst. So those who have least power to fight it, they're getting hit hardly. And so once we can mitigate that, and part of it is get some oil on the market. We have to. We cannot get everybody on solar power, but at least we got to get the price of oil down. I was very disappointed in the trip to Saudi Arabia by Biden. He couldn't get these Arabs, as we call them, change their attitude and give us a little bit more, or open the spigot a little bit more. But you know, I don't think we have the guts to teach them a lesson next time they're attacked. But I would have used the military-industrial complex to remind them that they need us. We may find oil somewhere else. They cannot file simple stuff as landing gear or fuel pumps for F-15 somewhere else. So, anyhow, but I'm glad I'm not in the White House. Yeah, that's. I don't think people could handle me if I was in the White House. So you're lucky I wasn't born here. Yeah, anyhow, I'll be too much of a fascist. So, any other questions or comments? Hi, Bernie. Mando, how are you, sir? Jarvis, how are you? Welcome. Oh, guys, don't forget also, we do. Hi, Dave, how are you? Let's see. Hi, Christina. Hi, Christina. By the way, we have been putting up those our system updates have gone out. Actually, I'm going to give keys out shortly after the year. Again, we post all of our linkages here. You have to click on members. You could see a webinar there or not. This is the one that was postponed. Yeah. Well, I'll put one for Wednesday. But this I think is scheduled for Tuesday. I have not updated these. We'll update these. Sorry. This last few days were very difficult because I kept just inches from being positive on COVID, on a relapse. I hear it's the Paxlovid inherent solution to the problem. So I will update that. But we have a ORB 4.6 chat room coming up. Don't forget that if you'd like to attend. It's all day. And but that has to be updated. So these are a little bit old. I'll get to them today. Then of course tonight I gotta send the keys out for the month of August because that's how they run the software on their own machine. It's doing good. We actually we've also opened up we have also opened up where did I put it? Is it here? Sorry guys, it's in my no, hold on. That option positions, no. Somewhere I'm wrong. There is a performance review of our system. I posted it, and we actually have two folks who volunteered to update the results. Hold on 1 second. It should be on this login. Hold on. I can't. I'm sorry. Hold on. Let me see where we are. Hold on. I have to go through my emails. Let me stop that for a second. Hold on 1 second. Let me go through. I gotta go to my drive, my Google Drive. Yeah. I just want to show you what we have. 1 second. Well, I hate these double authentications, but anyhow. Okay, so I go to the drive. There we go. And then there we go. Here's the share. Okay, we're gonna go here. We have a third party trading our software, and you can see the results there. It's live. Okay, I gotta put these two in, for example. And two people have volunteered, one for MNQ of their accounts. Okay. To show what the results are. You could see 46%, 1.27, receive win losses. And same thing is also for NQ. Okay, but yeah, we're missing the July data, but another gentleman's sharing it because that person had some transaction. He had to pull the money out, close the deal, come back in. We said we'll get it for another person. There's a bunch of people are trading it. It's automated. Um, the FTX is a StoneX. It's hands free, and results have been fantastic. Now, July was a little bit slow because it was summertime, but when we do a share, we send a link up. You can take a look, keep the link, and it's updated daily. You can see where we are. You can see what the system is doing. With that said, I don't have any much more to add. Thank you for coming in. We'll do it again on Wednesday. And have a good weekend. See you soon.